Hello everyone, welcome back to my YouTube channel. My name is Bahram. I'm an electrical contractor in Vancouver, BC. And in today's video, I'm going for a drive to one of my job sites, just grabbing a check or an invoice. I just want to take you along with me and kind of have a quick chat. So let's go. Thank you for coming back to another video here. One question that I always used to get back when I was working at the financial institution at one of the banks here in Vancouver was always regarding not being able to afford to buy a home. And I know that is not the easiest thing to do. I know that is not very simple, but it's something to for sure have as your goal and something to work towards. Because at the end of the day, everything is going to be difficult. Everything is going to be hard unless you actually set it as a goal and something that you want to work towards. And my own personal experience was that back when me and my wife were working, we were kind of living with my parents at the time. I had just finished school. We had to kind of see what we wanted to do. And because we did have a dog at the time, we weren't able to find anything or any locations that we liked for rent. Because of that, we were actually kind of forced into purchasing a property, which is actually worked in our favor, of course. I looked at it as it was a blessing. It was very hard, of course, because we couldn't get anything for rent. It was very frustrating. But again, it kind of worked in our favor long term that we were able to go ahead and purchase our first property, which was just a 2-bedroom, 2-bath apartment in the suburbs of Vancouver, not really close to the downtown area, which we didn't want to live there anyways. My family and my wife's family, none of them are really in the downtown core of Vancouver, so really kind of a little bit outside of Vancouver area, kind of worked out for us. But in any case, I just want to say that is like my own experience is that it was very difficult still to save up and then go through the mortgage process, getting approved with the banks for a mortgage, which I know that's a whole other hoops that you have to jump through, as they say. The experience was, you have to set it as a goal and you have to work toward it. You cannot just say, this weekend I'm going to go and look at properties and next weekend I'm going to buy the house. It's something that you have to make sure your credit is good, your income is good, depending on what you are looking to purchase and how much down payment you have, what you're able to get approved for, and of course having the down payment, and then after that being able to keep the property via making your mortgage payments. All that could sound complicated, of course. It's not just opening a checking account at a bank. There's a bunch of processes and steps you have to go through, but it's doable as long as you have the right mortgage broker that can walk you through it, provide you the right advice in the beginning, so you know what you need to have, as they say, have all your ducks in a row before you can go ahead and go back to the financial institution or your mortgage broker and be able to get funding for your property. That itself, those steps that I just mentioned, those steps sometimes is enough to, make some people kind of like not want to buy a property, saying that, it's too much work and, it's not worth it. I'm already busy. Maybe I have wife and kids and all that. But I see it as something that's very necessary and required. And this question always came up, even, I see it on the internet sometimes, and there's some books that I've read, and like I mentioned, even at the institution that I used to work at. And that question was renting versus buying and having a mortgage. So either paying rent or paying mortgage. Some people would compare it on a month-to-month basis, which is fair because you have to make sure that you're able to afford to keep it. Like I mentioned, one of the steps in this whole property purchasing process, at the final step, is for you to make sure that you are able to make your mortgage payments and keep your property. The last thing you want is to go through all of that and then 3-4 months down the line, you're like, this is too much, and you either have to sell or just get rid of it just because we cannot afford to pay. But the question always used to come up is that whether it's better for me to buy or just keep renting. And my advice was, it all depends. It's not a one size fit all. It's not like you cannot just tell everyone you have to buy, but you have to look at your options. And what does buying a property, or let's say your home, your own home, what does it actually mean, right? What does it actually mean to you? Because of course you have the whole, proud homeowner and all that comes with it. That's all great, but it's deeper than that. And what I mean by that is that it's not just about having the property and being proud of it and all of that, even just making the mortgage payment going from month to month. You want to look at it in terms of down the line. Let's say when you are close to retirement, what options do you have? What's going to be there for you? Here in Canada, for example, most Canadians rely on their property for the retirement. Obviously, it's not going to create income for you unless you have an Airbnb or a unit that you rent out, but it's more on the terms of how you have the opportunity that if you need to sell that property and then potentially either downsizing and then you have a paid off property and some cash in your pocket, or you could either refinance it, which is not the best option. But again, depending on everyone is a little bit different, depending on your income and your financial situation at the time. But what I mean by the options is that a lot of people depend on it for retirement. But that's okay if, let's say, someone says, no, I don't want to buy, or they're comparing it to renting, like I mentioned. But you want to look at it as, if you do not buy, what's going to be there for your retirement, right? Now, If you're 20 years old, 25 years old, it's hard to plan ahead that much. It's hard to see yourself as retirement. You're just starting your life out. You maybe just got in a good career. You're about to get married, for example, or whatever the life might be. But it's hard in any ways to see your 40 years down the line at 65 for retirement. This is where the discussion comes in, that if you are going to be renting, which is okay, you could be renting, but then are you going to be saving and investing? Not just saving, but also investing, whether it's the stock market, bond market, in businesses, startups, whatever it may be. But putting that money to work, the money you're going to be saving, number one, and then putting it to work, number two, is that money going to be growing for you enough that, let's say, when you are 60, 65 years old, maybe sooner, maybe a little bit later, that is going to be replacing what that home purchase would have done for you. Because don't forget, even though you're not buying, you're still renting. So you still have to pay on a month-to-month basis something for housing. It might be a little bit less than carrying a mortgage. It might be more, depending where you're living, what the rates are, and what the property of your choice would be, and what would be a property that you require. But if you're husband and wife with one kid, two kids, you can get away with a 2-bedroom apartment or a 2-bedroom townhouse. But if you have your wife and kids, and like a husband and wife with multiple kids, your only choice might be another detached house, full-size house. Look at all that into consideration. You cannot just say, yeah, that's okay, you could go rent, but again, your rent is going to be even more than a mortgage potentially, because you have to pay rent on a full house, or depending on the location you want to live as well, right? I always like to compare it in terms of what is it going to do in the long term for you. Short term, you can always make it work. Whether it's obviously lower, that's fine, but if it's higher, you could also make that work. If home ownership is very important to you, then of course you can try to see if you can get a second job, let's say in your career, see how you can move up maybe a little bit quicker, faster. Of course, if you're self-employed, see how you can grow that a little bit more, maybe get into another business that could potentially supplement your main source of income. But there's ways around it. But the main thing that I always looked at and I always advised on is that both are important, short term and the long term, but also look at it long term. Like I mentioned, short term you can make it work, but long term you cannot just make it work. You cannot be at 65 years old and then look at your finances and see how you're going to make it work now. It's going to be very difficult. You might have no choice but to just, if you're working, take your work pension. In Canada, we have like the CPP, we have the old age security, we have like the supplement that also add on depending on your income and things like that, your household income, but you have no choice to just depend on that. And that is not anything sufficient that you can, honestly have a mortgage or a rent that you have to carry on. If you have car payments, loans, anything else, it's going to be very tight and very difficult. And a lot of people actually get in trouble for it because, they're not able to carry that, right? And they're not able to live off that. Then, you're forced into, again, downsizing, or if you're renting, again, changing properties, maybe going to a less expensive area, smaller property, going from a townhouse to an apartment. That's why you have to take it in your own hands and do this type of planning, because no one's going to be really guiding you to that detail, right? The banks are going to talk to you about savings, RRSPs. If you have a mortgage broker friend or a realtor friend, they're obviously going to, tell you that it is good to buy and things like that, but it's very personal. I do understand that, but you want to make sure that you have the trade-off, that if you do not buy, then how you're going to support yourself at retirement. And if you do buy, how you're going to be able to manage to keep that property month over month via the mortgage payments, and just a general upkeep of the property. Of course, you got to consider that too, the addition of the extra cost you have to carry throughout the year for the property. And again, that's going to be things like property tax, utilities, for the water and sewage, home insurance, if you live in a townhouse or a condo, you have your strata or maintenance fee. Of course, like budget for all of that, take all of that to consideration. But the main point here is going to be long term, and how you're going to be able to survive and maintain your lifestyle for yourself and your family, when you do retire. What's that going to look like for you? Like I've worked with many people that they did not want to travel or anything like that. Now they actually wanted to work more, save more, invest more, and then at retirement, that's when they wanted to do, travel, 6 months out of the year or 5 months out of the year. That's fine. But you have to plan that early and know how much, approximately, potentially, how much is that going to cost you. So you know how much you need, let's say, per year as your total income. If it's something that's going to be a monthly, even breaking it down all the way to a monthly, and then looking at all your assets that you have, stocks, bonds, real estate, how you're going to be able to support that. Because what the government provides, I would say, is very minimum. You have to live on a budget to be able to live off what the government provides, which is the truth, right? Is the reality. property. It's good that it still provides. Maybe other countries don't even have that, but in Canada at least we have that. I don't know that too much to be talking about that, but I know that it's something, but it's not enough. It's not enough for you to support yourself, your family, and then if you're paying rent, if you have car payments, if you have loans, it will be very difficult. Which again, this kind of ties into retirement planning, wealth planning, and kind of how you want to plan for all of that and set all that up for yourself. Some of it, like I said, is going to be you have to plan a lot earlier. But this video, I really just wanted to focus on a lot of people that they kind of have this misconception of they have to buy, or if there was a trade-off between, let's say, buying a property to renting. So yeah, so just make sure you look at it short term. Make sure you're able to afford. Because rents are not that cheap either. It's not like it's going to be half the price of having a mortgage. Again, all depends on the area, the property you're looking at, the property you might need to purchase. Again, like I said, if you have a big family, you can't live in a 1-bedroom condo, right? So you have to compare all of that realistically and then see what the payoffs are going to be. Between all of this as well, another talk that comes up is if someone was to buy a property, having a mortgage, right, versus renting and saving the difference and investing the difference. And with that, it kind of ties back into, all depending on location, type of property you need, whether to purchase or to rent. With that too, realistically looking at it, you could potentially do that, right? But you have to look at yourself in the mirror and kind of see if you are the kind of person, you and your spouse, that if you do rent, that's that rent will be a lot less than the mortgage that you need to carry on whatever property that is in that area, for example, right? If you are going to be saving and investing the difference for retirement, not saving to buy bigger TV, saving to go on a nicer vacation, saving, and even just saving, not even investing because you're scared of investing. Because again, all this ties into that retirement planning and making sure that at the end of the day, you're setting yourself up and your family for an easy or easier retirement. You don't want to be stuck in a situation where you have to go get a job, your spouse might have to go get a job, in retirement. That won't be something that, neither of you want, but it's a sad truth that maybe potentially some might have to. Back when I was working at the institution, financial institution, and even now if someone ever talks to me about it, that's the conversation I have with them. So it's not just about what the month to month is going to be and, the difficulty of the whole process of getting a mortgage and, looking for a property, purchasing a property. All that is something that, if you really want to get ahead in terms of the purchase side, you have to deal with. You have to learn the process. You have to see what you need to do, income-wise, credit-wise, down payment-wise, and then taking the time to go in with your realtor to going looking at multiple properties, and then obviously with that you need to find the proper realtor that's has your interests at heart and is able to kind of provide you really good information about the area that you're looking to purchase. Not every realtor is the same. I've worked with multiple realtors. Doesn't matter how many years of experience they have. It just comes down to what their expertise are and how they look at your situation, and the type of advice they give you or the type of guidance they give you kind of matches with, of course, what you're looking for. And yeah, so just comparing all of that. But then if you're looking to rent, and again, that's okay as well, just make sure for yourself and your family, you're kind of looking at different options and kind of seeing how you're able to still rent, and then still, save and invest and maybe do different businesses that you could potentially have something for yourself and your family when the time comes for your retirement. The government provides as much help as they can or as they want to, but I can honestly say from experience that I've seen, dealing with kind of clients at the bank and, other people that are kind of around us, family and friends, that is not enough. It's not enough for you to have a comfortable life by any means. So it's going to be difficult to do that. So one thing that you want to keep in mind when the time comes for you to decide on which one you want to go with, whether it's buying the property or just renting, you want to make sure that some of it is how hard it's going to be for you to maintain. Like I mentioned, the payments, right? A lot of people get stuck on that, and I have experience with people around us and myself that I've had to really sit down and kind of see which one is a better option. And again, that's going to be thinking and planning short term, but still you have to make sure that you're able to keep the property that you're getting into, rent or mortgage, right? The way I always like to look at it was not just to make up numbers, but I would look at it realistically. So realistically, let's say if someone is renting right now in a 2-bedroom apartment, maybe 2-bedroom, 2-bath, or a 1-bedroom apartment, and they're paying $2,500 a month or $2,000 a month, whatever it may be, and then looking at similar properties and what those are, like how much they're going for, what the sale prices are, what the current interest rates are, and let's say you get approved for it, what would be your mortgage payments, right? And then of course, because of the, you know, 1-bedroom or 2-bedroom apartment or even a townhouse, you are going to have your strata fee. So adding that into it, you're going to have your property tax, adding that into it, breaking it down to a monthly basis. Property taxes are, you know, roughly the same year over year. Of course, they increase as property value increases, and they also increase when the city that you're living in or the town you're living in increases the, like, how they calculate for it too, right? So like, let's say they count per square footage, and let's say it's like $1 per square feet, they might bump it up to $1.10 per square feet. So what the rate that they're looking at, that might increase as well. It shouldn't be too much of a difference over year to year. So let's say if it's $1,000 a year, let's say you budget for $1,200 per year, for example, right? And then you break that on a monthly basis and you add that in, and then you're going to have your utilities, which is going to be your water and sewage, and then that information you could all get from your realtor, the listing realtor. They're able to kind of, you know, confirm that stuff with you and let you know what they have paid for the last 2 years, for example, and it will be roughly the same, right? And again, you could bump it up just to be safe, add that in as well. So once you do all of that, then you have a understanding or a better view of what the rent would be and what your home ownership cost would be. And again, that's like, you know, the mortgage with all the utilities, everything added in, right? So let's say you're renting for $2,000, but you add all of that, and let's say it comes up to $2,500. That's an extra $500 per month that you have to have as carrying cost via all the mortgage, everything, right? So then the first step I would say that I would recommend is, can you afford that? Before you do anything else, can you even afford it? Can you afford $2,500 per month? Now, if it's a no, then that's your answer. But again, if you're still determined you want to purchase, now you might look at different areas. Let's say the condo that you're looking at, area that you really like, is 500,000. You might look at another area that's, you know, a little bit further, a little bit, you know, different area of the same city maybe, but is around 470. 450. So now you're still buying, but you're able to kind of look at different areas to see what might be a better fit for whatever it is you want to, you know, have as carrying costs. And then say you do that, and now you bring it down to 2,100 or 2,200. Then again, the first question after that is, can you afford that? So you want to keep doing that until you get to a yes, right? And then once it's a yes, now you're going to be like, okay, so now can I actually get approved for that? So now you're going to go to your mortgage broker, give them all your, you know, all your documents, you know, your T4s or T1s, you know, notice of assessment, pay stubs, job letter, whatever it is, depending on your income situation, your type of income, how long you've been employed, all of that. Your mortgage broker will let you know exactly the documents they need from you, and make sure you give them exactly what they ask for. That kind of cuts down on the time of going back and forth. They keep asking you for documents, you got keep looking for it, you give it to them, another one, and that can keep pushing this, you know, down the line, right? It just makes it a worse experience for you. They might give you a list, they send you an email, or just let you know over the phone. They're like, send me this, send me this, send me this, all that stuff. Put it all together, take your time, put it all together, send that to them, make it as, you know, organized as you can, so they're also able to, like, you know, not go back and forth with you. Send all that stuff to them, and then see if you're able to get approved or not, right? So step number one, can you afford the payment that you kind of calculate? And then number two is that, can you even get approved for that mortgage? And one thing that they look at, obviously, for the approval is that how much down payment do you have? So income is one side, but the other side is down payment, because then depending on down payment, they know how much of a mortgage you need. So going back to that example of 500,000, let's say you have $100,000 as down payment, so you need a mortgage, you know, roughly of 400,000. So then you know that you need to get approved for 400,000. But then on the other side, let's say the same property is $500,000 condo, you only have 50,000. Now you have to get approved for 450,000. Now that's important, because depending on your income, your credit, you know, your other kind of debt servicing, like, you know, if you have student loans, car loans, line of credits, credit cards, depending on that, and depending, again, going back to that first part, which is your affordability on a month-to-month basis, if you can realistically even afford it. So then if, let's say, you have higher debt and all that, they may ask you for a higher down payment, because you may only approve for, let's say, 420,000. So now rather than the 50,000, you have to make the difference. So then you need 80,000 as down payment. So now you have to put an extra $30,000 down payment. And again, that kind of all depends, because then, you know, if that's the case, then you have to go back, see if you could kind of come up with that extra 30,000, whether you have to borrow from family, you know, friends, which is not very, you know, tactical, you know, the proper way of doing it, but, you know, you have to make it work. So that's why it's important to know all these informations. And it sounds like a lot, I understand that, I've gone through it a few times myself, but the other option is just to rent. And even renting nowadays, depending on area, depending on what you're looking for, is not going to be that simple, because, like, I've seen, so like like one listing for rent, they have like, 15, 20, 30 applicants that are applying to rent. So it's not as easy as just like, if you don't get a mortgage, now it's very easy just to go out and rent. And of course, the whole part of it, the conversation comes up too, is that if you do rent, now, you're throwing your money away, which again is housing. I don't see it as throwing money away, but as long as you have something set up on the other side. If you don't, for me, you are throwing money away because you're paying, let's say, $2,000-$3,000 a month. Nothing goes back to you in terms of equity or, kind of paying down the principal amount of the mortgage. And then at the end of the day, when it comes down, 20, 30, 40 years and it's time for your retirement, you have nothing because you haven't planned anything extra, right? Because even with house ownership, it's not that easy. I understand that, but you're still a little bit ahead just because you do have that option. So always look at it and see and kind of compare it for yourself and kind of see what makes sense. A lot of people will have different opinions, which to them is the right opinion and right advice, but it always comes down to yourself and your family and what it is that you're trying to accomplish. The worst part that I would say would be you don't get a do-over. Whatever decision you make, you really have to live with that decision. Like really, you have to live with that decision. Because if you don't buy, then you're now, you look up, 30, 40 years have gone by, close to retirement, and you don't have anything, and you don't have all that retirement, investment saved up or nothing like that, then that's very difficult. And on the other side, if you have purchased, but you weren't able to go on a vacation, afford anything else, just because you're house rich or house poor, they call it, all the money you make goes to housing, then that's also not a very, pleasant and nice way to live either, right? But it is a decision that you have to make because it will definitely affect yourself as retirement, your spouse, your kids, like your whole family, right? So think about it, plan properly, look at it realistically. Don't be scared of the purchase side and don't think that just renting is throwing money aside. Look at it both. Both are options, but which one is right for you kind of comes down to yourself, your family, and the way that it is that you really want to kind of manage your life. I hope that helps. I kind of ranted for a while there, but if you have any questions, let me know down below. I'll be happy to assist and help the best that I can. Right now, I'm not a financial advisor. This is not a financial advice. It's just a way of kind of me providing some guidance for some of the people that even I know that have that issue for themselves to not be scared again on the buying side and not thinking as renting and throwing money aside. Both are options available depending on which one is right for you. Thank you for watching my video. Please like and subscribe down below, and I will see you on the next one. Take care and stay safe. Bye-bye.